risk management plan, often the difference between success and failure. You can have the best trading platform in the world, but without proper risk management, you could still fail. So here are 5 steps to help you trade with confidence. Step 1, know all the potential risks. These are just some of them. Take currency risk, for example. A company in Australia that depends on imports will profit from a strong Australian dollar. One linked to exports will suffer. Or commodity risk. If the price of aluminium goes up, companies that use the metal in its production, like Alcoa, will see costs go up. Step 2. Define your own risk limits, the maximum amount you can afford to lose on any single trade and across your whole portfolio. Before asking, what profit can I make? First ask, what potential loss could I suffer? And set stop losses accordingly. Which leads me neatly to step 3. Know when to take a loss. Once you've set a stop, stick to it. Never move it further away thinking the market will turn. That's when big losses can occur. And that plays into step 4. Be aware of emotional trading, the enemy of success. Fear and greed can often destroy a trader. One study suggests emotional trading, which can tempt you to buy high and sell low, can cost you nearly 20% of returns over a 10-year period. So stick to your risk limits and learn from your losses as well as your gains. Finally, step 5. Ignore those around you. Each trader has their own tolerance for risk. So while a stop loss 30 points below the buy price may work for Mr. X, it could mean a bigger loss than you can afford to take. Remember, these are just 5 tips to help you control your risk. Proper risk management is a combination of rules and ideas brought together to create your own personal trading plan. So the best way to manage risk is to make that plan and stick to it. Go to IG.com to learn more.